Hi everyone, I hope you're doing well today. My name is Raeann Salter and I'm a QuickBooks solution provider. I specialize with QuickBooks Enterprise, Point of Sale, and Intuit Field Service Management. Basically anything that deals with inventory management. Please join me today for this video where I show you how to work with landed cost. So exciting, right? So let's get started. So do you have costs such as freight, duty fees, or direct product purchase costs that are not paid to the same company as to who you pay for your product, but it still should be added into the cost of your inventory item? QuickBooks Desktop Enterprise Platinum Edition has added a feature called Landed Cost. This creates a more sophisticated inventory management experience for users who have the financial need to know their true product cost, including their landed cost. Make sure your enterprise file is updated to the latest release in V20. Some functionalities of this feature were improved in later releases in QuickBooks. To update your software, from the menu bar, select Help, Update QuickBooks Desktop. The first step to set up landed cost is to turn on Advanced Inventory located in QuickBooks Enterprise Platinum Edition. From the Edit menu, select Preferences, select Items in Inventory, then select Company Preferences. Select the Advanced Inventory settings, select the Landed Cost tab, then select the Setup Landed Cost account. You can create a new account or use an existing account if you've already used a workaround in the past. I'm going to set up a new account called Landed Cost to Allocate. I have the option to choose the chart of account type as Other Current Assets or Cost of Goods Sold. I would recommend using Other Current Assets because the costs remain on the balance sheet side until you're ready to allocate the landed cost to your product. For the description, I'll enter assigned vendor bills for freight, custom duties, and other charges. Keep in mind that the landed cost to allocate is used as a clearing account that when everything is completed should show a zero balance. Click Save and Continue. In order to map shipping and handling items, you must have other charge accounts already set up in items. To see what we currently have, choose Add Item, then click the down arrow, and you can see the only account available is Finance Charge. That's not going to work for us. We need to add shipping and handling, custom duty, and insurance account in other charges. In order to create these new accounts to map, click Add Later. Then click OK, OK again, and then a third time to exit the preference screen. Before we create a new account, I'm going to go to the chart of accounts so that you can see the new account Landed Cost to Allocate. It's listed as an Other Current Asset with a zero balance. Again, this was created to be used as a clearing account. Now let's exit out of the chart of accounts and go to our home screen. To create new items for landed cost, you'll need to create the new items listing the other charge account type. Let's select the item list, select Item, then select New, choose Other Charge for the account type, and then we will create a new account called Shipping and Handling. We will also click on this item is used in assemblies or is a reimbursable charge to access the purchase description and expense fields. So in those fields, I will type in shipping and handling. And then we will also put in our expense account, which will be the landed cost to allocate. And then in order for the item to save, we have to add a sales account. So I'm just going to add a miscellaneous sales account. Then I'll click OK. And then once I save that, I will create another new account. And I will choose the other charge for the type. I will create the new account called Custom Duty. And I will click on the This item is used in assemblies. And then I will add Custom Duty in the purchase and sales description. And then for the expense account, I will put in landed cost to allocate again. And I will add the miscellaneous sales. And then we'll click OK, and then we've got one more to add. And for that one, we will choose the other charge for type. And then we will create a new account called Insurance. And then click on, you know the drill, this item is used in assemblies. And then in the purchase description and sales description, we'll just put insurance on shipment. And then for the expense account, you guessed it, the landed cost to allocate. And then the miscellaneous sales for our sales account. And then we'll click OK. And we are all set with adding our new items. Now we need to go back and map our shipping and handling items to the landed cost account. From the Edit menu, select Preferences, select Items in Inventory, then select Company Preferences, then select Advanced Inventory Settings, select the Landed Cost tab. Once you select that, it shows that the 3 expense items mapped automatically. Let's select the Manage Landed Cost account to take a closer look. Select Save and Continue to go to the next screen. As you see here, the insurance, custom duty, and shipping and handling items we created were automatically mapped with other charge as the type and landed cost to allocate as the current account and target account. If all your landed costs are added, select Save and Close or Add Later to exit the screen. Then click OK once, OK twice, and OK 3 times to exit the preference screen. Now that we've mapped the shipping and handling items, you can calculate your landed cost for any bill you add inventory and shipping items to. So let's get started. Bills are entered for freight, duties, import fees, and other product costs using the Other Charge items on the Items tab of Expense Transactions. In this example, we will enter a bill for custom duty paid on a shipment. Let's go to the Enter Bills, as you can see the icon here. And then when we go to fill out the bill, for the vendor, we're going to create a new vendor called Duties Are Us. We will add the new vendor. Next, you have to enter the date of the invoice. And since this is a sample file, it has the year 2025. So we'll just stick with that. We'll go with December 15th of 2025. And for the reference number, we'll just put 123 because I'm super creative like that. And then for the amount due, we'll put $1,000. And then next, we go to the Items section, and we will use the Items tab and select the Other Charge type, Items assigned in the Landed Cost setup. I will use Custom Duty as the item and enter $1,000 as the cost, plus if you have a customer job or class or anything else that you need to add for that row. Once you're done with that, click Save. Then let's take a look at the transaction. So if you click Control Y to see the journal transaction. The accounting result is to increase debit the other current asset or cost of goods sold account, which is the landed cost to allocate, balance created during the setup, and increases, which is credits, the accounts payable accounts balance for the freight, duties, and other related costs. The 1,000 in custom duty needs to be allocated to Paulson's Lighting. Go into Enter Bills, click on the Find button, look up Paulson's Lighting. Choose the bill dated December 15th of 2025. We have 3 items that need to have the custom duty allocated to the cost. Select the Calculate Landed Cost button on the top right. The Calculate Landed Cost window will provide options for allocating cost. Under the shipping and handling costs, select Add Bills. You can sort your vendor names, allocation status, and by date. I will choose the custom date of December 15th of 2025. Our Duties Are Us bill shows with an unallocated status. That is the bill we want to allocate, so check mark and choose Add Bills to accept. Choose the amount you want to allocate. For example, if the total amount is for 2 separate vendor bills and you need to divide that amount in half, you would choose $500 to allocate. You can view details for more information regarding the bill. Now you need to choose how you want to allocate your bill. Okay, there's a lot in this section to go over, so let's first toggle over the Select button to see your options to divide your cost. The quantity will take the individual quantity of each item and divide it by the total quantity to get to your percentage amount. In this example, the total quantity of 10 plus 15 plus 20 is 45. To get the percentage to allocate, QuickBooks will divide 10, which is the first quantity in the first row, divided by 45. That comes out to 22.22% as your percentage. They do the same thing with your second row of 15 and divide that by 45, which comes out to 33.33%. And then on the last row, they have 20. They take 20 divided by 45 to get 44.44%. To get your duty cost per item, it will take that total amount to allocate, which is $500, and times it by the percentage of each item for the total. The shipping and handling cost on the last column shows a total amount to be allocated, and that has to equal $500. You can also exclude an item from the allocation by unchecking the item. As you can see, QuickBooks will automatically adjust the amounts to be allocated. Easy peasy, right? If you choose percentage, the items are split in an equal amount. So say you have 3 items, which we do. The percentage amount will be 33.33, 33.33, and then 33.34. You can choose a unique amount to allocate per line as long as in the end it equals 100%. The amount is calculated by totaling the cost of each row, then dividing each one by the total cost. In this example, QuickBooks takes the totals of 400, 450, plus 960 for a total of 1,810. QuickBooks then takes the $400 cost and divides it by the $1,810. So for the first row, it will be 22.10 for your percentage to allocate. You will do the same for the other rows. And the last option you have is to choose the shipping and handling cost. Now this is manual. You can enter the cost of each item until it totals the $500. Again, keep in mind you can either include or exclude items from a specific vendor bill for allocating the cost. Let's select the quantity for this example. In the first row of item number P3261-06, you'll see the quantity is 10 with a cost of $40. So that is the average cost. So your total amount is $400. When you add in the shipping handling cost or the custom duty fee, your landed cost ends up being $51.11, each with a total cost of $511.11. Now I will click Post to Bill. Once you post your bill, you will see that the landed cost updated successfully. The screen shows the items which list the original cost, any markup account, original sales price, and landed cost. You can enter the new selling price for each item, then choose Update and proceed to manually record the item with the new selling price. Otherwise, choose Skip and Proceed to keep pricing the same as before the landed cost was added. Let's look at the transaction before we save. Click Control Y. The inventory asset account is increased debited with the original cost and accounts payable credited with the total of $1,810. Now let's click Save to record the transaction. Let's review the results now that it's saved. Enterprise maintains the original vendor bill amount by decreasing, crediting the other current asset account assigned in the landed cost preference. This setup for the amount of the allocated landed cost. So now the items total $2,310. The expenses, which consist of landed costs to be allocated, total $500. Let's look behind the scenes. Click Control Y. The inventory asset account will be increased or debited with $511.11, $616.67, and $1,182.22. The accounts payable amount of $1,810 will remain the same. The landed cost account will increase or credit with the amount of the difference, which is the $500. All this will take place while not affecting the original amount being paid to the supplying vendor. Whew, right? Okay, now we can go behind the scenes and take a little more of a look at everything. So hopefully, I know this is overwhelming, but we'll get there. Let's exit out of our bill to go to our inventory item list. Search for the item P3261-06. Taking a look at the item, we see that the sales price stayed the same at $95. The cost shows $40 with the landed cost at $51.111. The average cost went from $40 to now $41.91 and some change, with 58 on hand, which totals $2,431.11. Keep in mind that the landed cost is only calculated on the 10 items from the Paulson's lighting bill. Now let's exit out of here and let's take a look at our inventory valuation detail on that same part number. Let's go into Reports, Inventory, Inventory Valuation Detail, and then I will customize the report to show the part number. If we do the calculations, we will have 48 parts or quantity at $40, which totals $1,920. And then once we have the landed cost in with the other bill, it shows $51.11 times 10, with a total of $511.11. So this equals the total $2,431.11. So there you go, those two total. Now I have some things for you to keep in mind. We'll exit out of here and we will go back to the bill Paulson's Lighting. So we'll go into the Enter Bills and we will find the bill. It was dated December 15th. So now that we're in the bill, you can remove the landed cost by choosing Remove Landed Cost. It takes it right out of there. So all that work we did today is gone, but I'm not going to do that. But just to let you know that it's possible. Another thing to keep in mind is that the financials are affected by the date of the bill. Let's say you change the date of this bill to an earlier date. Your financials will have a lower inventory balance from your balance sheet and show a higher cost of goods sold in your profit and loss. Let's exit and go to our chart of accounts. The landed cost to allocate shows the increase in $1,000 with the $500 allocated as a debit. Since we use the same date, the decrease is showing first. But if you look at the total left in the account to allocate, that shows that you still have $500 left. Well, I appreciate you for sticking through the entire video. I really hope you understand in detail now how to work with the landed cost. I will be posting more advanced inventory videos to help you get the most from QuickBooks Enterprise. Thank you.